G'day traders, Stacey Burke from Stacey Burke Trading. Short video on level 3 trades. Just to clarify, last day after 3 levels of rise, 3 levels of fall, I got a ton of emails from traders, and I want to emphasize that is all I'm looking for. That's what I'm looking for. That's my playbook trade setups. So I'm getting questions about, just all kinds of stuff, and I need to understand that's what I am looking for is level 3. They're the one. The difference is you can be in trend trades, and some of these trends may move a lot, but they may be difficult to actually position yourself in with any reasonable type of size. The level 3 trades are typically going to be fast vertical moves. So I just need to emphasize that. We're going to go through some examples today. Again, build your playbook. I'm looking for high of day, low of day opportunities at the session timing windows, and I'm looking for markets that have moved. They need to have at least 3 levels of rise or fall. That may occur over Asia, London, New York. It may occur over the pre-market. It may happen in 3 hours. It could happen over. We could have a major, large opportunity on a third level after 3 weeks of rise. We'll look at some examples of the different types. So I get questions about risk. It's not about how many winning trades I've had in a row where I increase my risk. It's about the type of setup that determines the size and risk I'm going to put on the trade. So a session may open at or near level 3 and trap traders into the extreme, chasing their indicators on longer time frames or even shorter time frames back to the high or into the low before getting caught in an explosive reversal trade, which if they average into that, it may be the bottom of the month. It could be the high of the month, and it may not come back. You may blow your account out. So it depends on the template for the month, the week, the day, the session. All of these things are different trade types, but I'm looking for level 3. If I'm trading Asia and there's nothing else really set up, but I have it's gone 75 pips in Asia, I may have a trade opportunity heading into the next session because it's gone 3 levels. Is it a trend trade? Is the market trending overall? Am I trying to counter trend a trending market? No, I'm looking for the setup to complete the pattern before I enter the market. So again, the trade can be a stop hunt against a trend. We'll get level 3 trades against a strong trend. Are those the ones I'm looking for? Not really. I'm looking for stuff that's easy, that's broken down, or that's already inside of a peak formation, or it's already day 1, day 2, and it's a day 3 continuing a move, whatever that may be. I'm looking for easy stuff, not complicated. Trend trades can be stop hunts. They can be with the trend. So you could be in a stop hunt that's going with the trend that can be a measured move. It can be a blow-off move because you're on the 3rd level. So that might be a move outside of the high or the low, and then they actually might be locking in the high or the low outside of the range for a reversal trade setup, again at the high of the week, after news, whatever. There's different variables that will affect the type of setup. You can have level 3 in a month, a week, a day, a session for large moves. These ones have the potential to be scaled up in size, and they have the opportunity and the potential to make very large moves. So size the best trades, scalp the rest, control your risk, and develop the skill set in recognizing these opportunities when they show up. I'm going to skim through these charts. I don't want to spend too much time. This is a trade I did take this morning, just as an example, 3 levels of drop. This is a Wyckoff accumulation pattern, peak formation, 75 pip vertical move right at the open. They get traders selling down on the M at 50 into the next hour and a half. They get traders shorting this. This is 3 pushes on the 15-minute chart. You're shorting back into Friday's low. 1 push, 2 push, 3 pushes. They lock in the low before rolling back and trading right into the low before the Asian window opens. We get a 1, 2, 3 engulfment reversal, consolidation. I'm entering in on the pin hammer. I'm done. I want to get filled better than zeros. I'm looking at them to revisit at a minimum. Traders who were short this market actually continued up to 75, but I just took the 25 pips and got out. My decision. I'm not interested in trying to squeeze everything out. I just saw the setup. It moved right away. It was 75 pips. We're on the 3rd level below double zeros. They lock it in. They're getting traders caught short. This is an easy, low-hanging fruit opportunity on level 3. Aussie dollar, a great example, peak formation, 3 levels of rise. Into the beginning of the week, they take out the high of the week. Am I looking to try and sell it right at the high because I think it's going to reverse? No. Somebody said, they asked a really good question, do you just sell at the high peak formation or buy at the low peak formation? No, don't do that, because you'll get caught sometimes in a vertical move where the market's going to continue to go. And if you're trading oil, gold, NASDAQ, it might go 500 pips. So never recommend doing that. Wait for it to break down and lock it in. The high's locked in now. They come back and give us an M structure right at double zeros in the gap time heading into the US window for a 75 pip move back to where that pump and dump pattern began. Again, 3 levels of drop. Level 3. These are all level 3 type trade setups. The market, day 4, up, peak formation, they lock in the high of the week and break down in Asia. They come back up into that peak formation at the beginning of the London session. This is all low-hanging fruit in a broken down market at the high of level 3. Level 3 is there. We're on day 4, and we have 3 levels of rise. There's an easy 25 to 50 pip move, again, that was continued into the U.S. session. Level 3. Aussie dollar the next day continues after coming out of that level 3 trade, a second day trade. They come up 1, 2, 3 into 50. So they come down 3 levels of drop, pull it back, and put a peak formation in the lower half of the box. They give us our M structure for a continuation on day 2 of a level 3 trade. Sometimes you'll see this after the Fed or after major news, a second day trade that's come out of level 3, high of the week, low of the week. Again, a broken down market. It's already broken down. They come up above 75. We're in level 3 of a lower 100 pip box. They put in a high. They retest the high. It breaks down. They come back, break down again into our U.S. session to continue with our pin hammer. So again, traders who are asking, yeah, but where do you get in? You're not listening. The market's already locked in the high. They've already put in the peak formations anywhere in here, but there's our engulfment, our pin hammer. I want to get filled when the market is preparing to open. Right before that market opens, we get a pin hammer and an engulfment for the continuation move right into the U.S. window. It's already locked in. I told you yesterday you have 4 numbers to choose from. If you can't get filled at 75, get filled better than 50, because it's going from 50 plus. This has the potential for a measured move all the way back down to the low of the double zero box. Example on gold, this happens all the time. The last hour will take a market vertical to the high or to the low before locking it in. 45 minutes back into the high, engulfment, shortened M structure. I'm in the market. Where am I getting in? I just said engulfment. Engulfment after they hit the stops, double zeros. I'm adding it in. I'm getting in maybe here again after they break out. I'm taking some money. I might recycle that into the measured move down to where that trade began. It's the setup. So once they've hit the stops and locked it in, I'm in the market. I am in. The stop goes above the high. Same setup, just a different variation. Back to the high of the day. 3 pushes, 1 push, 2 push, 3 pushes, engulfed of the entire upper structure. 3 pins at 50 for an explosive fall through to the low of the day. I don't hang around something like this, New York Open. I'm not even worried about it. I'll just take my money. They've come down and gone into consolidation. I'm done the trade. Broken down market, 75 pip drop. We're in the lower 100 pip box now. They take it back up into the upper quarter above 75. 1 push, 2 pushes, 1, 2, 3 into the high engulfment. I'm in at double zeros as best I can get filled. Right at the open of the session, my thesis is this is all low-hanging fruit. It's going to fall right through there and possibly put 25 pips of heat into the people who are long off the low of the day. An example of where I won't put my target at 25. As time decay kicks in, so people say, what do you mean by time decay? Every 15-minute rotation as this falls and we get in this lower part of the box, I'll put my exit at 30 or 35. As soon as we're down here, I'm getting out. I'm taking the money. I'm just closing the trade. I'm not worried about getting filled right at the numbers or anything else. We've got a 75 pip drop. That's 3 levels of drop out of level 3. Again, a similar example to what we saw this morning. Another trade I did take. Level 3, 75 pip drops. They lock in the peak formation below 50, which is median price of a 100 pip box. They go up to double zeros and come straight back down, getting traders shorting into the low. Ascending triangle, consolidation, pin hammer right at the open. Engulfment for a shortened W for an explosive move back up through the high of the day and to lower level shorts that are up at the quarter level. Again, I'd be getting out just at the quarter level up here. I'm happy to take this and walk away. Not worried about holding on and getting the second leg or anything else. Great move. NASDAQ dropped down 75 pips, went into consolidation. Sideways, last 15 minutes before this market heads into the Europe Open. Breakout pullback, pin hammer engulfments. First locked in. It's a 1-bar stop. If you're not in here, you're in on the first bar as it starts at pin hammer right into the open. We're going to go vertical, not only just through this minimum, at this high as a minimum, but this market should retest the high in this big consolidation. The bigger the consolidation should be an explosive vertical move. This is a textbook classical charting pattern. Get Peter Brandt's books, Schabacher, classical chart patterns. Study these patterns. Again, a broken down market out of a peak formation into the beginning of the Asian session. It drops down 75 pips. They lock in a low at 50. They go into the third level, but a consolidation pump and dump setup. 3 pushes into the high. If you're not there to trade it at the high, when this market breaks down and goes into consolidation, I want to get in this trade as it's falling out of the consolidation before it gets to the low. Again, an opportunity for a potential measured move or 3 levels of drop. This market actually fell a bit further, but we've locked in the high. It's locked in. I'm getting in. If I can get best fill, I just want to get filled in this consolidation before it gets to the low of where the pump and dump began. Traders, obviously, that got in at the high can add to that position and then be taking some off at the low and holding on for the measured move. Perfect example, 3 weeks of rise on gold, a day 1, day 2, day 3 blow off, 3 levels, 750 pips vertical. This was the day that Russia invaded the Ukraine. Tremendous opportunity. These are sizable trade setups. These are the ones that you can really add into and look for an opportunity for a huge move back in the other direction. This is a 3-day setup. 3-day setup, 3 days of consolidation for the vertical blow-off move with trend. Again, study these patterns. 3rd week of rise, day 1, day 2, day 3, consolidation, vertical move. Somebody asked a question about the Japanese yen, but they had 3-day. There's no 3-day setups or 3 levels of rise and fall. I am not looking to counter trend a strong trending market. This wouldn't even be on my list. I wouldn't even be looking at it. As soon as I see this, I'm just not even interested. I'm not trading this. If you're a trend trader, you'd hopefully be into this trade. Again, we have a beginning of the month, day 1, day 2, day 3 consolidation. There's our rectangle. This is a big day 0 sort of pattern. Day 0 horizontal consolidation breaks out for a measured move 2 times that box. This is not what I'm looking for. Why would I want to counter trend a strongly trending market? I'm looking for easy stuff. 3 days of rise, market goes vertical on level 3. Day 4, they hit the stops on the news. So again, an example of a news catalyst at the high of the week for a reversal, pin hammer, shorter time frame. We had our M already locked in above 50. They went 3 levels, 25, 50, and 75 for a 50 pip plus move back. It was 100 from top to bottom, back through the low of the day. High of the week, level 3, gold trade setup. The market peak formation drops down, vertical, goes 1, 2, 3 right into the open of the London session on level 3. Again, 25, 50, 75 at the high of the week, upper 100 pip box. This is a scalable opportunity. High of the week. Smaller time frames. I'm using 1-minute charts to get into these trades. I'm adding positions into this as the market's falling. I will take some off and hold on for the measured move, at least 1 full expansion of this range. Gold, again, level 3, a day 1, day 2, day 3 setup. the market gave a level 3 trade in London on the smaller time frame. So we had a level 3 trade coming out of Asia on day 2, level 3 short, and a level 3 long. So 3 levels of drop out of London with the trend, again, the U.S. session vertical move. The next day, a lower double top on level 3, day 3, inside of a peak formation for the high, a pump and dump setup in London for the reversal. These are scalable trade setups. The smaller ones where you're scalping 25 to 50, I'm just scalping them with smaller size. When I get a level 3, day 3, high of the week, low of the week opportunity, pump and dumps inside, measured move opportunities, I'm going to be looking at sizing into those and holding on for as much as I can. And that takes practice. Gain euro, high of the week, peak formation, 3 levels of rise. Day 4, it's a Thursday. Peak formation, I'm not trying to sell the high or pick the high of any of this. I'm waiting for the market to break down. They pull it right back and engulf at the London Open. I'm expecting a retest minimum of the low of where the move began, but we're in the upper quarter. We're in the third level, and the market continues to fall 3 levels and retest down to the previous day's low. Market was broke down first. Gain a market that was trending, NASDAQ, they drop it down 75 pips into the lower quarter below double zeros. They go into consolidation. Engulf 15 minutes prior to the Europe window opening. We have an engulfment of a pattern within a pattern after the peak formation low stop hunt. Back with the original trend. This was a trending market for a fast, explosive vertical move. Again, a consolidation rectangle. We're at the low of the rectangle. If you're not in this move, there's an engulfment pin right at the beginning of the session for the continuation up. Full measured move, one full expansion of this range. They go up 3 levels, 25, 50, 75, 45 minutes. I talked about that in the last couple videos. They put a high of the day in place and break structure. They come right back up into the London Open and engulf. Again, where am I getting in? I'm getting in at the high after the engulfment. They've already broken down. I'm going to add to the position. I'm going to get in. I'm going to let the market break down and confirm. I'm going to add to that. I'm looking for at least a retest of the breakout of this box. Breakout traders have not had stops hit. I'm looking for at least a pullback down through these higher level longs, and ideally back to the breakout trade. 3 levels, third level, we're on 33. There's moves with the trend after 3 levels of drop. There's moves counter trend with 3 levels of drop. And again, people want to get back in the difference with this. You can see you can go along with the trend, but when you're in the creeping trend back up and you have size, back and forth, back and forth, back and forth, getting stopped out at break even, hard to hold on to that. I'm looking for vertical moves, fast moves. I can get out and get back in if I choose to, or just hold, take some off and hold, especially depending on where and how good your fill price is. Gold, level 3, high of the day. Again, news catalyst. We talked about this the other day. 15 minutes back up into the high. Our micro M structure at the high of the day. Micro M engulfment. I'm in the market. High's already locked in. They hit the stops. I'm in at the high. So when people say, and keep saying, where are you getting in? I'm getting in on the M, the engulfment. The high's locked in. Once they go back up there, 1 push, 2 push, 3 push engulfment, I'm in the market. I might add to it. As it's falling, add. Take it off. So where's my profit target? Well, this has moved 100 pips. Anything below 50, it could fail. Low-hanging fruit. Again, timing window. We get to the end of the 15-minute bar or near the end of the 15-minute bar. I'm going to be locking this in. It's moved 150 pips. So you got to know this before you're getting into the trade, though. 3 levels of drop, low of the day, 30 minutes down into the low. The third 15-minute bar opens. They engulf on the 1-minute chart. Pin hammer for an explosive 75 pip move back up. We're at the low of the day. I'm expecting this. We have low-hanging fruit here. They're trading back into the low after 75 pip drop. Same trade basically as this morning. They're trapping people into the low at the low of the day. Level 3. Same type of trade again on gold. They bring the market up 100, take it into the upper 25 pip box. They bring traders up 1 push, 2 push, 3 pushes into the high. M structure, engulfment. I'm in the market. I'm shorting it again at double zeros. Holding on. Taking some off. We have 2 levels of profit target. We can look at 50s if the market's still continuing to fall. I know with NASDAQ 9:30 New York time, this market might keep falling until we get into that new hour before it locks in the low. But again, we're looking possibly for 3 levels of drop, 25, 25, and 25. That 25 on underneath those lows puts 25 minimum of heat into traders that are long up high. Same setup again. Oil, back to the high of the day. First hour puts a high in, new high in. They take it back up for half an hour into the open of London. There's our M structure. They lock it in. I'm in the market. I want to get in at double zeros or better. The high is locked in. I'm going to add maybe. Market breaks down. I might take some off and hold. Bang. Measured move. Level 3. Again, go back to the numbers. We're above 75. They go. The high's above 100. I'm expecting something up here. I'm expecting this at the high of London or the open of London. 3-day setups. Euro drops 300 pips. And on the Monday, on the third level, it drops 75. They go to the third level again and go vertical in the U.S. session. None of this would make sense to traders on a longer time frame. You know, they're up money, or they get in on Monday morning. They're selling with the trend, and bang, they're 75 pips. It goes against them. Day 3, on level 3. Day 1, day 2, day 3, they reverse the market. We get the trend day out of level 3. This is coming out of level 3. Here's our low-hanging fruit, shorts chasing the trend. There's our vertical move in London and U.S. back to where the original move began, at the 100, 100, 100, 300 pip drop. They go vertical on the news on level 3. Reverse the market at double zeros in the U.S. session and drop it 100 pips back down into the vertical move up. So there are level 3 trades all over the place. You can spot them. The market drops down. Here's our second day trade. Out of a level 3 move, they go up 1, 2. They try to go up into the third box. In the gap time, it locks in the gap time. So again, there's an example of it already being locked in prior to the U.S. session opening. So go back, study your charts. This is what I'm looking for. So just to reiterate, I'm not trying to outsmart the market or show everybody that I know where it's going to be and tell you about, this and that. I'm looking for these setups. I'm just looking for level 3. They should explode. They should move fast. I don't want to trade other stuff. I'm not good at it. I'm looking for simple opportunities where traders are trapped chasing trends. The market gives me price action that confirms that. I'm at the higher low of the day or near the higher low of the week. Depending on the template, it may just be a scalp trade. It may be an opportunity to be selling at the high of the week for a 100 pip move. Again, I'm going to let the market set up and tell me where my trade is, and as the week unfolds, look for bigger opportunities to present as well. So hopefully you got value from that, traders. Keep it simple, manage your risk, look for the best trade setups, start the week off strong, and may the market.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.